So just to introduce myself, so I head up business development and partnerships at SharesPost. It's a San Francisco-based company. I'm technically based in New York, spent a lot of time in SF and obviously in the major hubs around the world. It's been with the team about a year, and before that I was building out the XRP ecosystem at Ripple. So again, split between San Francisco and New York, and working on the cross-border payments use case. And before that, I was an investor at BlackRock, where I was on a team that managed about $60 billion of institutional capital, mostly in hybrid securities and debt. And that was in New York. So SharesPost is a San Francisco-based company that has really built a business supporting secondary trading in the tech unicorns, starting with the names like Facebook, Twitter, Snapchat, in 2012, and more recently names like Lyft, SpaceX, Circle, and Ripple on the crypto side. And obviously there's kind of hundreds of unicorns now, and the market cap maybe nearing, I think, $1 trillion, potentially on a worldwide basis. So it's really something that we built a great business in, and now we're looking to take a lot of that infrastructure that we built and know-how and experience that we have and apply that to the security token market. So before jumping into the presentation, I just wanted to speak quickly about security tokens. So obviously you had this wave with ICOs in 2017, right, and prior to that. And the amount of capital raised was tremendous. There were a lot of notable players involved, but there were also a lot of lessons to be learned, right, and lessons that these spaces now accounting for and how it does things. And I think a lot of that is leading to this idea of a security token. We prefer the terminology digital security because not every security has to be on a blockchain. Some may make more sense for permission blockchains like Civion, Corda, Hyperledger, and others. It may just make sense to use a Bormel to work with database, right? Because at the end of the day, all these technologies are databases, but they're built for a variety of different use cases. And ultimately, we think what STOs offer as a concept is basically a compliant way to do a digital security offering, right? And frankly, it doesn't need to be blockchain related, though I think in many cases it is, and we're seeing a lot of issuers who see advantages to using a blockchain. So I just want to add that context at the start, because obviously now there's a lot of, I think a lot of the people in the ICO wave are now trying to figure out what the future is, and so there's a little bit of a hype cycle around STO. So I'd say take it with a grain of salt and ask the critical questions. So just in terms of agenda, I'll give you some quick background about SharesPost, so the mission, the history, and the team, and then I'll talk more thematically about the trends, so how we see private markets and security tokens converging. I'll spend a little bit of time on platform capabilities and then the conclusion. But I also want to save a lot of time for the questions at the end. So just as some background, as I mentioned, SharesPost was founded in 2009 and secured its alternative trading system and broker-dealer license with the SEC and FINRA in 2012. So that allowed us to start building out the platform, starting with the trading in names like Facebook, Twitter, Snapchat, and we've since scaled to about 300 issuers in the unicorn side. So here's a bit more detail. I won't speak to what's exactly on the screen, but I think some points worth highlighting are that we currently have a customer base of 170,000. 65,000 of those are accredited investors based on the US accreditation standard, and about half of those are institutional in nature, where they're either tier 1 or 2 hedge funds, smaller VC firms who may not have the same access as, say, someone like Andreessen Horowitz, and then also a lot of the family offices. What's happening in the US now is a lot of hedge funds are converting into family offices because they see an opportunity to invest in the pre-IPO or pre-public markets, and to play in that space, it's generally easier for your family office. So we're seeing a lot of ex-hedge funds that have that status. So definitely something that's become more institutional over time. I think in the early days, you had a lot of the doctors and dentists or kind of high net worth individuals that were on the buy side, and then your early employees on the sell side. What we're seeing now is you still have those same players, but you also have more institutional funds coming in on the buy side, And then some of your early VC investors are shortening their time horizons or thinking a little bit more tactically about how long they hold their positions for. So I'll just say that this is really a market that we see continuing to develop, particularly as a lot of companies want to stay private for longer, and then you also have the security token trend. So here up on the slide, you can see a number of the names that we support over the years. Obviously, a number of these are public companies now, but we've done about $4.5 billion in transactions to date. So it's not a high-frequency trading market quite yet. In terms of market structure, it's a lot more about having access to these issuances, right? Being able to get in and get out. So we think that 0 to 1 story is what the space should focus on now, and we can eventually evolve to the point where this looks like something close to NASDAQ, New York Stock Exchange in the future, or the Tokyo Stock Exchange. One point I wanted to highlight here is we did a JV with NASDAQ to build out the same capability for them about 4 to 5 years ago. The management completed that, and it came back to SharesPost to really scale the platform as we originally intended, because we saw SharesPost as the right vehicle for us to really do that. Because when you have public markets business, generally, in terms of how markets operate, people want to keep the public and the private separate. So we play in the private, and NASDAQ is still mostly in the public, or companies about to IPO. So one quick note here is, in terms of the jurisdictions where we operate, we have the ATS and a broker-dealer in the US. We just received draft approval in Singapore and Dubai, and we're exploring expansion of the platform into Hong Kong. Japan is also another country that we think is easily going to be in the top 5 markets for STOs and digital securities long term. But obviously right now the JFSA is working through a number of considerations. And from our discussions here this week, it seems like in about a year, things will be in a great place to really start scaling out in Japan. So we're extremely excited for that. Any questions so far? Okay. So I'll just spend a brief second on this slide. You just see the background of the team there on the screen. Just a bunch of logos, but I think the team's background definitely straddles traditional markets and the crypto markets, and so we think that really allows us to knowledgeably attack the market opportunity that we're going after. So I wanted to spend some time talking about the trends in the space and why we see this as a big opportunity, specifically in private markets. So on one hand, you have growth companies staying private for longer, right? You have Uber that's about to IPO, supposedly at $120 billion. That's $120 billion of value that's been created in the pre-IPO markets, right? So again, going back to the point I made earlier, that's why a lot of these hedge funds are now converting into family offices so they can play in the private space. On the other hand, also, you have a lot of these issuers have a strong aversion to going public, partly for reporting requirements and partly for control requirements. That's a trend that seems to be continuing. And so that's something that we think positions us well to really scale out and support this market, especially as the number of issuers and investors continues to increase. On the other hand, on the right side, you have a lot of what's happened in the ICO space is now going through some maturation and iteration, and we think that's providing momentum to the STO side of crypto. Startup, the way we see the space ultimately is, in terms of STOs, is from a couple of angles. So on one end, you have a lot of projects who believe they have a utility token, and we do think the notion of a utility token exists, but the challenge right now is combining that with this idea of security. What does the regulatory path going from a security token to a utility look like? That's not something that's really answered in any jurisdiction yet, but we're working closely with US regulators and the regulators in the other jurisdictions where we're involved to help drive that forward, because we do think this provides kind of a compliant path to market for utility tokens. On the other end of the spectrum, we're seeing a lot of tokenization of existing assets, right? So you get the real estate issuers, fixed income issuers. Ultimately, we'd like to see a lot of the unicorns that we support digitize their cap tables as well. It doesn't have to be blockchain-based, but we think there are certain advantages in certain cases. And so that's really on your more established end, where you have these major issuers. And we think it's going to be very important for this market to help bring those kinds of players in, because ultimately, security tokens are not really solving for the capital markets problem, right? They're an incremental technology that we think is opening up a huge total addressable market, but you still need high quality issuers, you still need investors who participate in the market, and just simply issuing an STO is not going to solve for that. So that's a problem that we're really focused on in terms of the issuers that we work with, how we work with them, when we work with them, and that plays a lot into our thinking. Because if everybody's a Series A issuer, it's hard to really grow and scale the market to bring on the institutions. Institutions want to see everything from Series A through Series F, and we think a particularly interesting use case for an STO is kind of as the most junior rank of common equity or the most junior rank of preferred equity. So these kinds of evolution of thinking is definitely happening now. We're working on that with a lot of our partners, and we think that's going to help drive the convergence of these two. Some quick stats here, just illustrating what I spoke about just now. So we've had a very strong increase in the number of US unicorns. If we were to do the latest cut of this data, it would be even higher. On the right side, you're seeing the number of public companies start to drop off, and that's a trend that's happening in markets around the world. And then, of course, on the bottom, you have the amount of funds raised to invest in unicorns, and then the number of private 100 million financing. So all the trends show a clear indication that the private markets are here to stay, and there's a lot of opportunity for innovation and infrastructure to be built to support that. Questions so far? So this talks about the other side of the trend, so STOs and digital securities. So in the top left, you have the amount of startup capital raised from ICOs, right? So obviously ICOs are not STOs, but we think that trend is indicative of broader market interest and the willingness to fund things and to democratize capital markets, which we think is the real promise of digital securities. Broadening investor access to issuers and issuer access to investors. In the top right, traditional startup capital raised and deployed. The bottom left is capital raised and deployed in digital securities issuers. We did include ICO in that definition for the purpose of the chart, because I was taking it from somewhere else. And then in the bottom right, you have the number of ICOs raising more than 5 million. So again, all encouraging trends that we think help to validate this opportunity. So now we'll spend a bit of time talking about the platform capabilities. We won't spend too much time on this. Yeah.
Before you transition here, sure. Questions are half baked in my head, so it makes sense as it comes out. But I guess you talked about the current kind of client base being accredited investors or family offices. And just thinking about the democratization of finance opportunities, do you see this being then opened up to a broader set of the population? And if it is, will it be kind of a wild west like the ICOs were, or
Sure.
How much regulation do you think is going to come in to protect investors and stuff like that?
Yeah, it's a great question. I think at the end of the day, so accredited investors are still a pretty limited market, right? In the sense that I think there's a lot of hope and expectation around the promise of retail having access to a lot of these markets. But it's definitely not something that, if and when it happens, it's not going to happen overnight, right? And I think right now, our view is really that the framework under which it's operating is kind of the perfect balance where, obviously we're a little biased, but where you're still allowing innovation to happen, you're still broadening the base of investors from just, say, a club of 20 asset managers who buy up most debt deals and the handful of VC firms that get most equity deals. So there's still that broadening of access for both investors and issuers. It's not perfect, it's not sort of the full kind of end state like a Charles Schwab or something like that, but we think we'll get there, right? And in fact, we're already speaking to some partners who are more retail-oriented and looking at compliant ways to provide access to the assets on our platform in kind of a Schwab-like way. So I definitely think it's a dangerous thing to broaden it a bit too quickly, because then you just get retail comes in as a last money in every market. Yeah, exactly. It's, so it's definitely something to be careful for and careful about, make sure it happens in a measured way, but something that we continue to speak to the regulators about. Does that answer your question?
Yeah, it does.
Okay, so in terms of our platform capabilities, there's really four main components to what we do. The first is trading, second is research, third is accounts, and fourth is funds. So in the trading side, I mentioned that we have an ATS and a self-clearing broker-dealer in the US. We have launched OTC trading for both STOs as well as the unicorn shares. We do have order books that we'll be launching as well. The reason we have not launched those is because if you look at a lot of the digital securities that have come out of the market initially, they are tokenized funds. And when you're talking about a fund based on US securities laws, you have a maximum number of investors that can usually invest in that. And a lot of other jurisdictions have similar rules. So these things are not ideal for high frequency order book. And we think the market might have come in a little bit with the wrong expectations. So we're working on the education to explain to people why we haven't launched order books. But it's definitely something that we will do for things like equity, REITs, because you can have a lot more holders of those kinds of investments, and you can start to get a liquid market where order books make sense. On the second point, research. So this is something that I think we're fairly unique in doing, but we're trying to bring sell-side institutional research quality to the private markets. So we have a team of ex-sell-side analysts who are looking for innovative ways to provide more transparency, information about this market, and we think that helps contribute to price discovery over time. And the bottom left, accounts. So we have brokerage accounts that, in terms of how they work, they look similar to, say, the account that you have at a brokerage now. So you can see your cash and cash equivalents, security tokens, and private shares all in one place. We are currently doing custody for digital securities in the US. We've been working with the SEC and FINRA around that. And then the last piece in the bottom right is investable funds. So this is something that retail can access. Smaller ticket sizes, and basically the intention behind that is to provide broader access out to the kinds of unicorns that we have on our platform. So what the fund does is it takes stakes in the top 100 names that trade on the platform, and as those IPO, obviously you get an increase in liquidity in the fund itself. And so that's something that we continue to expand. Just a quick note about the registrations and licensing, because at the end of the day, the regulation and the regulatory environment is core to what we do. So we have a registered ATS license that has been formatted to support blockchain-based securities or digital securities. We also have the self-clearing broker-dealer, as I mentioned. And we have the ability to custody these assets as well. So fiat cryptocurrencies like Bitcoin and Ethereum, and unregistered private securities. Yeah, I think those are the main points here. So this is just a quick snapshot summary of the capabilities our platform has. So you've got the secondary trading, new issuance distribution. And this is an area that we weren't originally envisioning on playing, but we saw a lot of potential to take the platform that we have, the distribution that we have, out to all the investors and help SDO issuers or companies raise more capital. So this is something that we've had a tremendous amount of interest in, so we're building out a pipeline of issuers behind that. You've also got the research and data, custody, portfolio management, and then the investable products I mentioned for retail. Yeah.
Sorry, just a question. For the funds that you're looking to launch, I guess the main holdings would be the SPOs and the unicorn shares, right? And the pricing, daily NAV calculation, and all that would be a challenge. Like, how do you plan to?
Yeah, it's a great question. So it's definitely not it's not the kind of market where you have tick level pricing and pricing on a minute by minute or even like a second by second basis. We are seeing that slowly evolve over time and move in that direction. But for right now, a lot of the marks are based on, or the marks are based on the most recent transaction, right? Because at the end of the day, you have a buyer and a seller, and you don't really, this market is kind of where it plays. You're not talking about public companies that report all their financials, have highly diversified sources of revenue. You do have a number of those, but not every company is like that, right? So the valuation is definitely, it can be a challenge. It's really a function of where the market clears. The research team that we have will put out analysis on the companies, right? So we have access to valuations and waterfall information, so we put together the waterfalls on the equity side, and that helps to drive a lot of price discovery. And additionally, the research team also works on analyses of their own, and we find that that helps to drive a lot of market activity. But you do end up with situations where the market applies a significant premium to what might be considered the fair valuations of these companies. So it's kind of part science and part art, but we're looking for ways over time to increasingly systematize and drive that transparency in the market. So the next few slides go into a bit of detail on each of these. I'll go through those kind of quick so we can save some time for questions. So on the secondary trading side, I think the key update here is that we've launched OTC trading in US security tokens. And then we'll be launching the electronic order book in Q2. And then, of course, a new issuance, as I mentioned. A bit more detail on the electronic trading here. That will happen out of the brokerage accounts that we have on our platform. So a way to provide consolidated access into all the markets that we support. And so this is a bit more detail on the new issuance piece I mentioned. So there you can see a sample flow that we have. But we try to be as comprehensive about the information as possible, and we try to loop in the issuer as much as possible and really do things on the margin that help to create a market around this, and a market that people trust, right? Because I think people's confidence and trust in the market has been shaken by a lot of what happened in the ICO wave, and so we're trying to bring that institutional credibility that we brought to private shares into STOs.
Question. So about this trust, what exactly are you asking them to trust about what you're saying about these things?
So we're not asking them to trust anything that we say. We're a broker and an intermediary. So we don't, in fact, we stay strictly away from suggesting anything about assets on the platform, right? We have an OTC trading team of about 20 people, and they'll engage with clients based on what their interest is. But for us, it's really, we're not out there selling any particular asset. What we're doing is, we're going out and finding the highest quality issuers out there. So whether they're unicorns, whether they're like an STO issuer. So we go and find the best partners, the best issuers, and that's really where the trust comes from. Are all the issuers on the platform something that people can look at and feel good about? Are the investors the right kind of profile to really build a business over time? So that's what I mean when I say trust. It's not like we're going out there and saying you should buy this. We don't.
So this is maybe a naive point of view, but I feel the whole point of a public listing is that we're saying, or wherever it's listed is saying, hey, this company is audited, they've got to adhere to these certain things, they have directors who can't go trading ahead of information getting out, et cetera, et cetera. Are you doing the same thing?
Absolutely. So we comply. Obviously, the private markets are a little bit different than public markets in terms of securities law exemptions, what rules apply. But we maintain absolute compliance with all those rules in the private market. And a lot of the specific aspects that you mentioned have similar analogs in the private markets. And that's something that we stick to 100%. Because at the end of the day, the whole business that we provide is created. It's born out of the regulatory environment. So if we don't follow the rules and do this in a compliant way that we can put our heads up high and stand in front of regulators, then we don't really have a business, right? So it's absolutely core to what we do in terms of following all the compliance processes and ensuring that we provide all the required reporting, and even in many cases we push our issuers to provide optional reporting. Because we think if we can bring some kind of hybrid between the public markets and completely opaque markets, it's still a step in the right direction. So that's kind of how we think about it. Yeah.
Can you give me some more clarity on where the U.S. regulators are in terms of what they perceive an STO to be and how they look at an issuance right now?
Yeah, it's something that they, in terms of their perspective, and obviously things continue to evolve, but we keep a close dialogue with the regulators. it's something where I think they see the status quo as continuing to apply, right? You have a public securities market framework, and this is all US centric, but I think we're seeing regulators in other key jurisdictions map somewhat to that approach. So you've got the public markets and you've got the private markets, and you've got rules and exemptions available in each of those markets. Depending on the year, there may be certain exemptions that are under review on a periodic basis. The US regulators are really seeing the idea of a security token fall under that private markets framework and potentially in the public markets in the future as things mature and evolve. But I just think the kinds of players in the public markets, like your NASDAQ, your New York Stock Exchange, the TSX, they're not stepping in yet, right? So that's why people don't really speak about this in the public markets context. But in the private markets, they're applying exactly the same framework. So in the US, it's the Reg D and the Reg S exemptions. And in fact, if you look at how we do our offerings, how we do the trading, we have all the exact same reporting as if it were a non-blockchain asset, right? So we're trying to bring that, all that infrastructure and that process to new rails, basically, but we still have exactly the same infrastructure and exactly the same process. Does that make sense?
Sorry, so is this reporting the same reporting someone would have to do with a publicly listed security for their company?
No.
No, it's much less, because that's the whole point of private markets. You don't have to do all that work. And
Exactly.
you rely on the investors to say, hey, it's your problem if you have to be a lot more sophisticated when looking at this, right?
Exactly, and that's why it's limited to accredited investors.
So would you also talk about more specifically, like how to distinct STO from ICO? And also, do you think it's possible for, ICO projects to sort of transition into STO market and potentially, be listed onto a platform like yours?
Sure, yeah, so I think so earlier I mentioned, I think there are really two buckets in the STO space, right? I think you have the kind of the existing asset issuers, so people who might be tokenizing equity, debt, real estate, and then the other side of the spectrum is really these utility tokens or kind of early blockchain projects who have a utility token but are trying to find a way to compliantly do it, right? So I think in that context, the way that STO became the evolution of ICO was it's applying a compliance framework and institutional approach where you are limiting to accredited investors, where you are requiring a certain amount of disclosure but not as much as in the public space. And it's applying these kinds of things that traditional market participants know well to the idea of a token offering. Because at the end of the day, it's still an offering, right? So I think that's really how that trend came about in terms of people just, I think the way the crypto space uses the word STO is not always right. Like there's a lot of control F ICO with STO. I think that's a little bit dangerous. And we're trying to do a lot of education around that. But I think that's sort of where a lot of the interest came from in terms of the ICO space. And then the second part to your question, I apologize.
So is it possible for past ICO projects to sort of transition?
Yeah, so there's a bit of a challenge when you're talking about past ICO projects who've already issued a token, because then you have the token out in the wild and you have to sort of bring it back and unwind all the transactions. Or there might be a fine or some kind of happy medium that the regulators and the issuers agree on. When you have brand new projects, so this is where we're seeing a lot of interesting approaches by really thoughtful projects who have utility tokens. I can't really name names, but there's a few in the US, there's a few in Asia, and these are some marquee names who believe they have a utility token, but they're issuing in accordance with the Reg D and Reg S exemptions in the US or in accordance with the MAS's framework, and seeking to sort of incrementally become a utility token. So we're seeing a lot of that from new issuers, but I think some of the historical projects, we'll have to see how it goes. Yeah. Any other questions? Yeah.
There is a lot of talks nowadays about the hybrid valuation, like combining STO and ICO. Yeah. So, what's your thought on this? Like, can any project issue STO and ICO at the same time? Because STO is like a one second. Then again, once they release, then again, getting released, you need tokenizing, so you can have
Yeah, so the answer to that would depend on the specific regulatory framework in the country, right? Because I think in the US, the approach that the space is sort of coalescing around or aligning on is that, and a lot of this is based on the SEC's indication and guidance, is that people should assume they are a security token unless they sort of hear otherwise or until they prove otherwise. So that's where this idea of kind of an evolution from STO towards a utility token is happening, to the question asked earlier. When you're talking about a different framework though, like, so we've heard some indications here that the JFSA may consider an approach where there's a utility token framework, payment token framework, and a security token framework, right? So with that framework, you could conceivably have someone who maybe comes on issues both at the same time. Often in markets, you have restrictions around sort of how many offerings can be run in parallel, so you may have to sequence it out. But when you have a framework like that, you can have projects who come out on day one and say, oh, we're a utility token. But in the US, it's a little bit more of an evolution, if you will. So I think there's, in terms of the answer to that question, I think it's honestly, it's early days for the space. The regulators and the companies are all trying to figure it out. And it's definitely iterative. So I think we'll just have to see what happens over the course of the next year. And the answer is going to change depending on the jurisdiction. But that's kind of some initial thoughts. Any other questions? Yeah.
So my question is related to trade matching process. Just to give a context, my name is Jan. I'm working as a blockchain lead engineer at a FinTech company, which is a subsidiary company of Tokyo Stock Exchange. And we did 2 POCs related to trade matching process on the DLT. But the current problems are actually more operational one than the technical one. For example, right now in Japan, the calculation methods for unit price, settlement amount, commission, means of notification are actually not standardized. And there is no industry-wide optimization in Japan. And that's one of the biggest challenges we faced in the 2 POCs which my parent company had done. So I believe these problems also existed in your market. So what are the steps have you taken to address these operational challenges which are much more than technical ones?
Yeah, sure. So to provide a good answer to that question, probably need an hour to walk you through like a lot of the just things that we've learned over time. But I think I'm definitely happy to speak about that after. But I think at the end of the day, there's a lot of so put it this way, I think in the private markets, when you're talking about something like a TSX or a NASDAQ, there are significantly higher stipulations and requirements, including but not limited to disclosures. And so there's just a lot more that people can sort of execute on by looking at the rule book, if you will, right? Here's how commissions are done, here's how transaction cost analysis should be done, and so on and so forth. When you're talking about private markets, there is less sort of there's less of a robust or understood playbook, and so there's more of an opportunity to drive how that is approached in conjunction with the regulators and other players. That's kind of the role that we play, where having been in the business with unicorns for the past 6 years, we have a pretty good playbook. We've been through a lot of learning experiences, and so just continuing to iterate on that over time. And then of course the NASDAQ JV helped us see what the other side looks like in terms of public markets, and so we brought back some of the best practices. So I think the short answer is it's just kind of it's an evolutionary process. And definitely agree that when you're talking about a market like this, the core blocking problems are rarely technical, right? And I think even in many ways, the exchange or the matching that we operate is not a blockchain-based matching solution. We intentionally did that because you often introduce scalability issues if the matching happens on blockchain. So I definitely agree that the technical part is important, but it's probably easier than the operational considerations and just how to fit things in a regulatory framework, and that's really the hard stuff in what we're doing. Any other questions? Yeah.
Yeah, so cryptography is a hobby of mine, and I understand fairly well the cryptographically how blockchains work, but I'm not sure quite how they fit in with this. Can you tell me what's the core difference between a security token and a cryptocurrency like Bitcoin?
It's a great question. Frankly, I don't really think digital securities are something that sort of fits with Satoshi Nakamoto's idea or vision, if you want to call it that, right? Because when you're talking about something like Bitcoin or Ethereum, that's a bearer asset. Like if I get my token tax, I don't get those back, right? When you're talking about a digital security token, whatever you want to call it, when someone's STO gets hacked, they still get it back, right? Because you have the cap table, you have the transaction record, you can always roll things back the way that the securities markets work. So at the end of the day, it's not a bearer asset, it's not what Satoshi Nakamoto had envisioned. I think there
So
are
you're
just...
saying that Ethereum is not a bearer asset because they also rolled that back.
Yeah, this could be an hours-long conversation for another time, but yeah, I think at the end of the day, it's just, you're saying that the blockchain is the cap table for an STO, right? And that cap table could also be on permission databases like Symbian, Corda, Hyperledger. It could also be on a more old Oracle database, right? So I think there's really a range of things where these things can be issued, and it's definitely something issuers should ask themselves about. Why should I do this on a public chain versus a permissioned one? But there will be cases where it makes more sense to have it be on a closed database.
Well, one of the things you can do with cryptocurrency that doesn't seem to fit with the idea of securities is that anybody in the world can make more of this cryptocurrency. Given a certain investment of resources, you have a certain probability of, I just made a new amount of this cryptocurrency that I now own. And I'm presuming you can't do that with security tokens, right?
Right.
Right, okay. So that's really, this is almost entirely blockchain unrelated then, in that you could just as well keep your list of tokens in an Oracle database with no cryptography involved at all.
Absolutely.
And say this guy has that, and so long as somebody's got a way to change that DB, say this guy now owns this, you'd have the same thing, right?
You're 100% right. And that's why we shifted away from security token to digital security. Because at the end of the day, what we think is going to enable this private market trend is really, it's less about if it's blockchain based or not, right? It's more capital markets. Can you bring the right issuers?
So it sounds to me like you're all about making private securities a heck of a lot more liquid, and the blockchain thing is just a distraction mostly.
I would not say that to the pipeline of 60 issuers we're working with who have built on the blockchain, right? So we are not in the business of, as a company, we're not in the business of trying to convince or not convince our issuers on which cap table to issue on, right? We're an infrastructure provider, we're a service provider. So if an issuer comes to us and they have a good asset, that's the most important thing, good asset, good company, existing people to buy, then that's really the core criteria, right? Whether they are issuing a blockchain or a database, as long as it meets our compliance requirements, our system requirements, we're happy to support whatever it is, right? So, and I will tell you, out of the pipeline of digital security issuers we're working with, about 60 to 70% are doing it on public chains.
Mm-hmm.
So I'm not one to argue with what technology is truly right for something, right? You can get lost in philosophical discussions forever around that. But rather, I think it's a little bit of VHS versus Betamax aspect, where some percentage of people who are doing a public chain-based security token have probably not really considered or critically considered, could they do this on an Oracle database? Why not? It's a fact, right? But that's a fact of, I think, all big waves of sort of innovation, incremental, evolutionary, or revolutionary, however you want to call it. It's just something to deal with. And we try to continually do that education. But we're not going to tell someone they shouldn't use Ethereum if they feel like they have completely considered that point, if that makes sense.
Right.
We're building a business here at the end of the day.
That's slightly different than my point.
Sorry, but I think that was a wonderful note to end this conversation on. Otherwise, it becomes a true dialogue here. So, give Vijay a round of applause.